Let's bring in Michelle Schneider, Chief Strategist at Market Gauge. Michelle, thanks very much for joining us. Really appreciate it. Is that the main thing hanging over the market right now, a fear that rates won't be coming down as rapidly as hoped?
Well, good morning, Andrew. I would say it is a big fear, not the only fear, but certainly one that will dictate a lot of the areas of the market that were very hopeful after a Trump election would prosper, particularly the U.S.-centric areas like the small caps, the retail, the transportation, because they're very interest rate sensitive.
Mm-hmm. And I mean, there was a knee-jerk reaction, the Republicans taking control of both houses of Congress, and Mr. Trump, of course, returning to the White House. Are there fears that because one party controls the legislative system and the White House, that there's going to be maybe policies that are unbalanced or inflationary? Because we keep hearing the market likes to see a divided Congress.
Well, yes, and historically, a divided Congress has been better for the economy and for the market. This, of course, is historic, so it's really hard to know. And probably the most interesting aspect is still really how divided the country is. And there are people who are so terrified at what's going to happen next year. And then you have more than half the people who voted for Trump feeling like everything's going to be great with this sort of Republican Trump domination. And of course, that remains to be seen. So it behooves us as investors and traders to keep an objective mind, number one, and to look at certain key indicators like interest rates, as you mentioned before, as to what's going to happen, as opposed to try to get too swept into either the euphoria or the tremendous dismay. And that's kind of what we're looking at. So, for example, not only the interest rates, but you mentioned inflation. You have to look at what silver and gold do here. They sold off well, but they're getting a nice bid this morning. You have to look at the grains and the softs. I think that's something that has been very undervalued, particularly in the grains. But the softs, if you looked at coffee last week, it made a new 13-year high. Now sugar is starting to rally. And you have to look at the dollar, of course. That's going to be a big factor, and I think that'll be a little bit of a geopolitical football, if you will. So that's kind of the key areas right now.
The NVIDIA, what are your thoughts on NVIDIA? There is a report that their chips heat up the equipment too much, and they want at the last minute a change in the server rack design. The stock has dropped, and we get their earnings on Wednesday, as you know.
Well, a couple of feelings about NVIDIA. Number one is obviously the lofty projections for earnings. I mean, you have to think at some point, where do they cap out? And there are some real concerns besides the overheating. Obviously, the tariffs might be a concern of theirs going into 2025. So I think rather than focus so much on what NVIDIA does, it's really what's going to be the domino effect. And the whole chip space has been underperforming really since July. So if NVIDIA cannot do what a lot of anticipation is, and that is, I've seen analysts at 250. If it cannot get through this 150 level that it's been sort of trading at right now, then you have to wonder how that's going to impact the rest of the market, because we need tech not necessarily to rally, but definitely to stay in the game.
You mentioned gold off the top. What is your feeling on gold? Is it a decent bet right now? Obviously, the high US dollar is a headwind.
It is a headwind, but it hasn't really been that big of a headwind throughout the year, actually. The gold has rallied. Now, it sold off initially again. I think that might have been a knee-jerk reaction to the Trump trade, number one. Number two is, of course, Bitcoin stole a lot of the thunder. But that doesn't mean that gold isn't still a long-term buy, particularly as we know as a flight to safety, which we still have major risks, not only with debt, government spending, but geopolitically wise. And at 2,500, or it got close to it, that seemed like a good area. Now it's flirting with 2,600. I would say I like it. I think you can still sit with it. I think we can still see 3,000, but I'm even more focused actually right now on silver, which I think if silver can get back through like $31 an ounce, that's probably a good sign that we bottomed out at around 30.
Why are you keen on silver? Because of the industrial applications?
Well, that, and also there's an inflationary component to it. And thirdly, actually, what I really am interested in is how it performs versus gold. Because in typical inflationary times, silver will outperform gold. And thus far, they've been sort of dancing with each other. But if we really see that happen, I think people have to turn their attention to a return of inflation, particularly since we can see in this country it has stopped going down in terms of inflation numbers.
Right, silver about $31 this morning per ounce, down from more than $34 in late October. Give us your take on a stock like Alibaba, because presumably US-Chinese tensions might make investors wary of a name like that.
Well, what's so interesting about China and Alibaba is if you look at the list of major hedge funds that are buying China down here, you have to wonder, do you follow the smart money? I mean, not only do you have Michael Burry and Ray Dalio, but I read that Izzy Englander, who's a Millennium Partners, has been buying. And so George Soros, his fund has been buying. And so you have to ask why. I mean, obviously, these are people that are not worrying about a day-to-day fluctuation. They're looking long term. And I think what they're saying basically is A, China will do the stimulus. B, whatever happens with the U.S. and the tariffs, if we cannot come up with some kind of deal with them, then can they be independent without the U.S.? And they're very busy making deals with other countries throughout the globe, which is smart, actually. If you think about it, if they feel like they're being isolationist policy of the U.S., what would China do as the second largest economy? Turn elsewhere. So, yeah, I think it's probably a good investment at these levels.